Hi there, welcome to Kneppy Invests. Impeccably timed video today on Pointerra, looking at their June quarter Appendix 4C. And the reason this is impeccably timed is because I had planned to do this video on Monday the 23rd of August. And on that day, the share price of this company dropped 12% in one day on no news flow. We also saw massive volume come in. It does look like this could be a bit of capitulation because the share price of Pointerra has been dropping quite a bit over the last 4 to 6 months. In fact, the share price is in a well-defined downtrend. And whenever the share price is in a well-defined downtrend, there are some signals to look for that downtrend to be coming to a completion. And one of the things I do look for is a bit of capitulation. And that is the last of the shareholders who just are too concerned with the share price dropping that they just have to sell out. They just can't handle it emotionally. And possibly that is what we're seeing right now with Pointerra. Because when you go through their June quarter Appendix 4C, and they did release an annual contract value report a few days after that, this company is performing quite well. We are seeing this company grow. There's nothing concerning in their financial state right now. But with the share price dropping and with this negative sentiment, there are going to be shareholders out there of Pointerra who will be concerned. And how you react to the dropping share price, in my opinion, is all around your conviction levels. If you're high conviction about the future success of Pointerra, more than likely you'll see opportunities here to buy into Pointerra at cheaper prices. So you're probably happy that the share price is dropping because you can buy more and more shares. Then there's going to be those low conviction investors who see the share price dropping. They're not that convinced that Pointerra has a bright future, and they're concerned, they're worried, and they're the ones who will sell out the more the share price drops. And we just have to wait for all those low conviction holders to sell out before we see the end of this downtrend. That's why a day of capitulation like we saw or potentially saw on Monday the 23rd of August is a sign or a potential sign that the share price is turning around. There will also be some shareholders who see the share price dropping 12% and are convinced that there's someone out there who knows some bad news about this company and they're selling out, and we'll see this bad news in a few days. More than likely, that's not going to happen. And I'll show you 4 companies, fairly well-known companies, some of these, who have seen their share price drop by a considerable amount as a publicly listed trading company. In fact, one of these companies, Amazon, I'll give that away right now, saw their share price drop 95% in 2 years from about $113 to $5. Right now, the share price of Amazon is well over $3,000. That's probably one of the most well-known cases of a share price dropping. And if you just remain patient during that share price drop, you'll have seen significant returns over the past 20 years. Before we get to the June quarter Appendix 4C, just a few facts in regards to Pointerra. Pointerra provides solutions for managing, visualizing, working in, analyzing and sharing huge 3D data sets. This is a large growing area and will continue to be a quickly growing area or sector over the next decade. So I do believe Pointerra is positioned quite well for the future. That's why this is an exciting company. This is why Bevan Slattery got excited about this company just over a year ago, or nearly a year ago. The ticker code for Pointerra is 3DP. Now the market cap at 35 cents, this is after the share price dropped 12% in one day, is still around 237 million. That's quite a bit lower than when the share price was 90 cents. I do think that was getting a bit frothy, the valuation at that point in time. The receipts from customers, only $4.1 million in financial year 21. So if you do compare the market cap to the receipts, you might say, yeah, there is a bit of premium priced into Pointerra, and I will actually acknowledge that right now. But the market is thinking that this company will experience significant growth over the next 5 years, and that's definitely in play. And we're already seeing signs of that when you look at the annual contract value, which is at $9.8 million right now. And that's up 24% from April 29. So that's in 4 months. The annual contract value has gone up 24%. More than likely, we'll see that get above 10 million, or could be right above 10 million right now, and can continue to explode over the next few years. And receipts is well behind that annual contract value. So if you look at that number of 9.8 million, we'll see receipts get towards that over the next year or so. So we are going to see receipts grow quite quickly. And because margins in this company are quite high, a lot of that receipts will go down to the bottom line. So this company is going to be operational cash flow positive from now on, in my opinion, and going to be profitable. And as those receipts grow at a quicker rate, most of that growth in receipts will go down the bottom line. Very similar to Medicus. I'm not calling this company the next Medicus, but that's how Medicus has exploded in valuation over the past 5 to 7 years. Price to sales ratio is 68. I probably would prefer to compare the market cap to the annual contract value. And if you do that, you only get price to annual contract value of about 23 to 24. If you want more information on Pointerra, I highly recommend going to the website, looking any presentations the company has released, and going to the Appendix 4C that they released on the 29th of July. Before we look at the June quarter results for Pointerra, I just want to go back to the March quarter to see how the company was progressing at this point in time, and then to see how the company traveled over the next 3 months. It is a mistake some investors make to look at one quarter's results in isolation and even compare it to the previous quarter, because when you do that, you are liable to make some mistakes. I do think some investors did that when they just looked at the June quarter results and just compared it to the March quarter. We are going to do that, but I'm also going to look at the receipts history for Pointerra over the past 3 or 4 years. Now, I'm getting a little bit ahead of myself. Let's go back to the March quarter. Receipts to customers, $1.4 million. More importantly is Pointerra don't spend a lot of money on staff costs, administration, and research and development. And because they don't spend a lot of money on costs, they were operational cash flow positive for the March quarter by $211,000. Another thing to mention here is they don't spend a lot of money on investing in financing activities like acquisitions, spending money on intellectual property, that sort of thing. And that means that $211,000 they were able to generate in operations went to the bottom line. And overall, the cash increased for Pointerra by $600,000 and finished the quarter at $5.1 million. Now let's go to the June quarter to see how things have progressed for this company over the past 3 months. Although cash receipts did rise in the June quarter, it wasn't by all that much. And there were probably some investors who expected a greater increase in receipts. And that's why we saw the share price for Pointerra drop 12% on the day they released their Appendix 4C. The other thing is some of their costs actually did increase a little bit more than the receipts and customers. And that meant instead of being operational cash flow positive by $211,000, they were actually operational cash flow positive a little bit less, only $98,000. But again, this company doesn't spend much money, if any money at all, on investing in financing activities. Thus, that $98,000 they did generate in operations went to the bottom line, and they actually increased the cash on hand in the overall business by $100,000 and finished at the end of the June quarter with $5.2 million in their bank. Pointerra released not only their Appendix 4C announcement, they also released a complementing annual contract value updated announcement. And this announcement is what got me a little bit more excited about the future of Pointerra, particularly around the growth in annual contract value over the past year and even over the past quarter. If we go back to the quarter 4 financial year 20, annual contract value in that quarter was $2.9 million. Now it's up to $9.8 million. That's a triple in ACV over 1 year period. That is significant growth. But even if we look at the quarter-on-quarter growth, it's gone from $7.9 million in quarter 3 to $9.8 million. That's a 24% growth in ACV in 1 quarter. If they continue that sort of growth over the next year, there is potential. We're going to see annual contract value move past 20 million this time next year, and potentially, if everything goes right, move towards 30 million. And if it does move towards 30 million, this company is going to be highly profitable because the margins in this company are quite large. The other thing that got me excited is Pointerra is starting to win more contracts in a broader range of sectors. So instead of winning contracts in a very limited amount of sectors, it's a wider range of sectors. So there is a potential of significant growth because of that one simple fact. I've already mentioned you can't look at receipts or 1 quarter's receipts or even 2 quarter receipts in isolation. You need to look at the receipts history through time. There will be some investors who just looked at the March quarter and the June quarter this year and saw receipts only grow by $100,000, and that would have distorted their decision making. When you do look at the receipts history for Pointerra through time, going back to December quarter 2017, when I started following this company, receipts have grown at 28% per quarter. And they're actually potentially accelerating. You could actually argue with me, the growth in receipts have been growing at an exponential rate over the past few years. Now, the other thing to take away from this is there is a bit of lumpiness. You will see this growth in receipts over 1 or 2 quarters, and then receipts come back. And that's to be expected for companies like this who are winning contracts on a continual basis. Sometimes the cash flow from those contract wins won't come for a little bit of time. So this is to be expected, this sort of lumpiness. So you don't make decisions because of that lumpiness, particularly if you have or don't see much growth from quarter to the next quarter. You need to look at the overall trend. And Pointerra have been growing their receipts at 28% per quarter, which is very similar to the annual contract value growth rates as well. And if we continue to see this sort of growth rates over the next year or 2 years, more than likely cash receipts per quarter will approach $3 million or even $4 million within 1 year. As we move on to the daily chart for Pointerra, which goes back to July 2020, just before Bevan Slattery decided to invest in this company. He would have done a fair bit of due diligence, more than likely, leading up to that investment. But that was the catalyst for the re-rating in Pointerra's share price. And we saw the share price climb from 5 cents just before he bought in to a high of 92.5 cents in February of this year. That's a massive increase in this share price. The other thing that coincided with the increase in share price or the uptrend was a significantly larger amount of volume. So there was excitement in the market around Pointerra. However, since that high of 92.5 cents in February, we have seen the share price go backwards. It has moved into a downtrend. And the other thing to take away from this move into a downtrend is the volume. It's falling away. So there's less excitement in the market right now with Pointerra. But we haven't seen a lot of selling up until the release of the Appendix 4C, which we did see a bit of a sell-off that day. 8 million shares sold. Share price fell 12%. And then on the 23rd of August, we saw without any news flow, the share price fell 12% on significant volume again. This is potential capitulation. I'm only going to say potential right now because we need confirmation. But this is one of the first signs I will wait for a potential bottom in the share price when the company's shares have been dropping through time. Ideally, what I want to see now is the share price to go sideways. And the reason I want the share price to go sideways is all those low conviction sellers or low conviction holders who are a little bit nervous now, a little bit concerned about the share price dropping, will have their opportunity to sell out. And the reason I want that to happen is the people more likely to buy the shares of the low conviction holders are higher conviction holders. I think more than likely we're already seeing that now. Higher conviction holders are more willing to buy shares now because the share price is dropping. So we get a turnover from low conviction holders to higher conviction holders. And once that happens and we wash out all those low conviction holders from the share registry of Pointerra, that's when we might see the share price start climbing again. Now I'm just going to show you 4 charts of fairly well-known companies around the world who have seen their share price rise through time. But even though the share price has risen through time, we have seen periods of time when the share price has dropped by a significant amount. And when I say significant amount, I'm talking about a more than 50% drop in the share price during a period of time. First company here is Medicus. Some might argue with me. This is the best quality company on the ASX, and it is priced like that. The premium you have to pay for this company is excessive, but that's a whole different video. Back in September 2019, the share price of Medicus rose to a high of $38.30. And then over the next 6 months, we saw a 60% drop in the share price of this company and fell all the way to $14.50. And that drop was helped by the COVID-19 financial panic. I do know some people, some investors, who saw really good value in Medicus at $15, and they did buy at that point in time. So it does show you that even when the share price is dropping, some investors will see value, and a lot of those investors actually did pick near the bottom of this company. And since that low of $14.50, the share price has risen about 5 times, and it's up to a current share price of $66. From Medicus to one of the biggest cap companies on the ASX, even though this company is not profitable, and this is Afterpay. Even though we always hear the talk of how the Afterpay share price has risen by a significant amount since they listed on the ASX, and even from $8 during the COVID-19 financial panic. If we go before that, there was a period of time in 2018 when the share price of Afterpay fell 55% in 3 months. It dropped from $23 to a low of $10.36. So even in these companies where all the talk is about how the share price has risen over time, we do see these drastic drops in share price. From one of the most highly valued companies on the ASX to the second most valued company, this is CSL back in 2002 and 2003. Even though if you've been holding on to your CSL shares since they listed, it's been a massive wealth winner for you. You would have gone through some concerning times back in 2002 through to the middle of 2003, because the share price in CSL dropped 78% over an 18-month period, dropping from $17.33 to a low of $3.86 in June of 2003. Now, this is one of my favorite charts because not only does it show you that really high quality companies can see significant drops in their share price over a period of time, it also shows you the value of being able to read a chart and understanding technicals, because the share price of CSL moved into a well-defined downtrend back in the start of 2002 and remained in that downtrend for the next 18 months. There was a couple of false breakouts towards the end of 2002, but when we did see a consolidation period, when the share price started to move sideways, the 3 moving averages came together. We then saw a breakout to the upside, and that breakout to the upside after a consolidation period was the start of a new uptrend. And if you bought in because of that breakout from that consolidation period, you would have seen your shares rise quite drastically in CSL. And potentially you would have been a long-term holder because the shares just kept on rising over the next 20 years. So it does show you the importance of remaining patient. It does show you the importance that just because the share price has dropped 78% in 18 months doesn't mean the quality of the business is at question. It also shows you the importance of being able to read a chart. Now, in saying all that just because the share price drops by a significant amount doesn't mean that puts the quality of the company in question. Now, the flip side to that, a lot of times when you do see the share price drop by a significant amount, you do have to question the quality of the company. Perfect example of that is AMP. I won't show you the chart there, but from the time they listed on the ASX, the share price has kept on dropping. But it all comes back to your conviction around a company. If you have that high conviction that the future of the company is quite bright, more than likely it will increase in value, then when you see the share price dropping by a significant amount, there is that potential, that opportunity for you to buy into that company at a much lower price. Now we come to one of the most famous charts and examples in the world of a company's share price dropping by a significant amount. And this is talked about a lot. And this, of course, is Amazon. Back during the tech bubble in 1999, start of 2000, the share price of Amazon went to a high of $113. And then during the tech bubble crash, we saw the share price of Amazon drop from $113 to a low of $5.51. It took 2 years for the share price to drop that amount. Now, understand that back in those days, there was no certainty that Amazon would survive because a lot of other companies in this space did not survive at all. So there was no certainty about the quality of this company. It was only in hindsight we came to understand that this was a high quality company. And again, this comes back to being able to read a chart because we saw the share price drop for a considerable amount of time. And then towards the end of 2001, towards the start of 2002, we started to see the share price consolidate, move sideways, and then we saw the new uptrend develop. And when that new uptrend developed, towards the end of 2001, we saw massive volume coming in. And that was the start of a new uptrend. And the share price around that time was between about $10 and $12.50. So even though that wasn't the bottom, in fact, the share price had already doubled from the bottom, that was confirmation of a shift in sentiment in Amazon and the start of a new uptrend. So even though the share price had dropped 95% over a 2-year period, you could have bought Amazon at around $10 to $15 back in 2001 and 2002. And the share price of Amazon has risen from that $10 to $15 to $3,265. If you enjoy this video series on companies that achieved an operational cash flow positive June quarter, look out for videos on these 4 companies in the next week: Fluence, Tesserent, Red River Resources, and a recently listed ASX company, Airtasker. I hope you've enjoyed this video on looking at Pointerra's June quarter Appendix 4C and also discussing a few other things. If you have any questions about anything I've discussed in this video, make sure you leave a question or a comment or just your opinion in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.